And I know times like this, you just take it slow. I fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Assalamu alaikum warahmatullahi ta'ala wabarakatuh. This is Ahmed Shawi by Liquidity Club. Today is Sunday, the 9th of July 2023. I'll be doing the weekly review for the upcoming week and I'm gonna review the last week. So let's dive deep into it. Starting with the DXY, the weekly chart, as you can see here, last week we respected this, the bodies has respected this weekly inversion fair value gap, and we kept trading lower, taking this sell side liquidity. So for going for the next week, I'll be still looking for sell side for lower prices reaching to this discount week, consequent encouragement, and the sell side liquidity low as a draw liquidity objectives targets to be reached during the next week. Going to the daily chart on the DXY, as you can see here, last week we respected the consequent encouragement of this weekly inversion fair value gap, the bodies has respected this level, and it's just kept trading lower. So we're still looking for sell side liquidity to be reached. Now from here, price can rally a little bit higher to form the power of three form, which is accumulation, manipulation, distribution. So we might see some kind of retracement to the upside, perhaps to the weekly inversion fair value gap or to the breaker that is found here. As you can see here, this is a high, low, higher high. Even it's a higher high with a shallow, just a bit of a higher high than a lower low. There could be a breaker right there. So price could actually go up higher, reach to the weekly inversion fair value gap low, perhaps the consequent encouragement that is overlapping with the bearish breaker, and then trade lower, reaching to the sell side liquidity targets that I have highlighted earlier. Going to the hourly chart, as you can see here, last week we've been trading in premium for a very long time. We took this buy side liquidity, and what is reasonable to see from price to trade lower, as we've already been in premium, so there's no need for us to reach up for further premium. And in other words, we're also bearish on the higher time frame, weekly time frame. So price has reached to the premium. It offered price to the smart money to accumulate short positions here and then trade lower, reaching to the sell side liquidity. This is the breaker, the bearish breaker that I have highlighted, where price, if it wants to go higher, it can reach to it, which is also the low of the bearish breaker is overlapping with the consequent encouragement of the weekly inversion fair value gap that I have highlighted on the daily chart. Going to the ES, the weekly chart, as you can see, last week I have mentioned that I want to see price, since we have reached to this weekly fair value gap, we want to see price trades higher. It trades higher, and it has a potential fair value gap to form, and I've mentioned that I want to see it drop below to this line that I have drew, and I want to see price trade back to it to make this price efficient and no fair value gap to be there. So it did that. It dropped down. It traded back to the high of this candle. It reached to the volume balance that is shown on the daily chart. I'm gonna mention it, and it has respected these defined fair value gap, consequent encouragement, and the fair value gap, consequent encouragement, and closed there. I want to mention one more thing, that if we want to remain bullish and we want to take these buy side liquidities, I don't want to see price trades below the consequent encouragement of this candle. Going to the daily chart, ES daily chart, as you can see here, price has created a high, reached the fair value gap, created a higher high, reached the volume balance. I'm expecting price to create a higher high, which will make three drive patterns, and this high would be reaching to the volume imbalance, to the consequent equation of premium wick, and the liquidity void, and then potentially reach reverse or retrace. Going to the NQ weekly chart, as you can see, price, just like the ES, it has been consolidating, making this price range a balanced price range where price is just going further up and down, making no moves. Also, this is a signature in price where after price taking this buy side liquidity highlighted here, it started consolidating. This is a signature in price action where if it happens, this is a strong indication that price wants to continue going higher, as it still has unfinished business that is in the upside and it still wants to reach there. If it were to reverse after it reached to this buy side liquidity, it would immediately reverse and go lower, but it didn't do that and it started consolidating. So this would be considered as a balanced price range in the future. Going to the NQ, the daily chart, as you can see, price has created a lower high here, whereas the ES has created a higher high. If you rewind the video and see that price has created a higher high. So this is an SMT, but this would indicate that the leadership has transferred and transitioned from the NQ to the ES, as price has created a higher high in the ES. So it indicates that it's stronger, whereas in the ENQ it has created a lower high. So we might see a consolidation or a very lethargic moves to the upside in the NQ, whereas in the ES we would see an expansion to the upside. Going to the Dow, this is the weekly chart. As you can see, price has just been printing consolidation for the past 3 weeks, and it's just moving nowhere. It's giving no respect to this weekly inversion volume imbalance. So personally, I wouldn't touch it. I'm just using it as a tool, so I don't care where it's trading to. But I'm still preferring the upside, where we have relative equal highs here and this buy side liquidity. Going to the EURUSD, also known as the fiber. This is the weekly chart. As you can see, I've mentioned last week that we have recently formed printed fair value gap. Price has revisited it one more time, and it started trading higher, reaching to this buy side liquidity and to the consequent encouragement of this premium wick, which overlaps perfectly. It's worth mentioning that it fell short 3 pips from reaching to this buy side liquidity and this premium wick consequent encouragement. So we're still favoring run to the buy side liquidity onto the volume imbalance, and also to this buy side liquidity right there. Going to the daily chart, as you can see, price has created 3 drives pattern to the downside. If you see this signature on price doesn't need to take a low in order for it to reverse. Why? Because it has built sell side liquidity below this and it swept it. It has also built sell side liquidity below this and it has already one more time swept it, and then it has reversed. So if you see this pattern, it does not need to take the sell side liquidity, any sell side liquidity that's shown in the past. But in here, in this example or in this chart, it has reached to this fair value gap and it has rallied up higher. Also, last week's profile was Thursday reversal, where this is Thursday. Price has been trading. This is Monday, Tuesday, Wednesday, Thursday, Friday. So this would be the accumulation manipulation, then the distribution. So as you can see here, it fell 3 pips short from reaching to this buy side liquidity and this buy side liquidity. So we're still favoring a run to the upside on the Euro USD, also known as the fiber. Going to the pound USD, also known as the cable. It's very similar to the Euro USD or the fiber, but here we've seen also price trading lower this week or the last week, trading lower, respecting this buy side liquidity high, and then trading off it, taking this buy side liquidity and closing there. As you can see, I've mentioned that I want to see higher prices in the last weekly review. You can always refer back to it, and you can watch it. I cannot edit it, so it's always there, and it's going to be there forever. I also mentioned that if you're sure about the direction that price is going to be trading in, it's better to trade the pound because it has to be having the exaggerated moves, whereas the euro USD it's going to have weaker moves compared to the pound. So like the pound is just like the Nasdaq, and euro USD is just like the ES. So this is a close look on the weekly chart. Our price traded lower this buy side liquidity level, and traded higher, taking this buy side liquidity and reaching to the strong liquidity fair value gap. Daily chart. I'm expecting price to retrace a little bit, potentially to fill this potential fair value gap, to make it efficient, and then run higher furthermore to this bearish order book target. Going to the hourly chart. As you can see here, price, this is last week Sunday's opening. We traded lower, forming the low of the week at 3 a.m. on Monday, which is the London Open. And then we started trading higher from there, taking the buy side liquidity here. So Monday was the low and Friday was the high. As you can see here, there's a the bullish breaker where we have low, high, lower low, and then we have a higher high. Price can trace a little bit here, fill this fair value gap, and react from this bullish breaker to continue the move to the upside. As a side note, it's worth mentioning that last week it was a real roller coaster, and we had a holiday on the 4th of July, which is, I believe, the Independence Day, and we had the NFP on Friday. So personally, I was completely away of the markets. I took a week holiday. I wasn't watching the markets, but starting from the next week, we're going to see much cleaner and better opportunities that are going to present themselves in the marketplace, which I'm expecting that. It's also worth mentioning that for the upcoming weeks, we might see a potential low volume in trading. Why? Because we're entering the summer months, and in summer months you would expect less from the market. That's because there is a low volume in the marketplace. So that was pretty much it for this weekly review. I hope you learned something from it, and until I talk to you next time, be safe. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.